Good morning, everyone. A lot of information to take in today. So yes, I'm coming from London, and I'll be talking about the work done by a group called Debt Resistance UK. We're a small group of activists and researchers set up to challenge the narrative of debt as inevitable and apolitical. And I want to emphasize that, like, we're normal citizens. Hardly any of us have background in economics, and everything that I'll be showing you today, most of it has been basically self-taught and interacting with experts. Our aims are to research, inform, organize, take action around debt, and we try to look at different forms of debt at the same time. So from personal debt, national debt, we've been doing also quite a lot of events on Greece. But the main work we've been doing this year has been focusing on local government debt. So I'll drive you a bit through the work that we've been doing. This is just a slide to sort of enter the conversation. So this comes from one of the councils where the Olympics were held. And going through their accounts, we came across, first of all, like an advert saying we need to cut 50 million. And then on another page, we found the actual amount of interest that had to be paid, which was more or less exactly the same. So the way we've been working is, first of all, researching and using mainly documents that are in the public realm, so online documents of the government. We took on also work that had been done by another organization, Move Your Money, that Joel is also here. So the work had already been initiated by another group, and then we decided to focus specifically on the part of debt. We did a lot of work also with FOI requests, which I'll explain later. We put a lot of importance on sharing information. Whatever we do in our organizations, it's really important that we translate it in a way that normal citizens can understand this. So most of the things that I'll be talking about today, you'll find it on our website. We're very happy to share the PowerPoint with anyone who needs it. But also, like, using social media, putting on events in local groups and so on. All these things are fundamental. So we did extensive use of freedom of information requests. So we sent more than 500 freedom of information requests to more than 260 councils. And we took the sort of, I would say, political decision to use the platform, What Do They Know? And this is because it's a platform in the UK where you can actually put your request through the platform and receive the replies to the platform. So basically, all the requests you're putting through and the replies are on the public realm. We also use this combined with Google Docs, and this allowed us to automate some of the processes. We were lucky enough for a financial journalist to pick up our work, Nick Dunbar, and he managed to produce a documentary for Channel 4 based on basically looking at our data and re-elaborating it. And even if we unfortunately weren't really quoted or credited in the documentary, this allowed us to receive like some, there were interviews with financial specialists, and also it brought the topic into the mainstream media and tried to explain it in an accessible way. More importantly, one of the people interviewed was Clive Betts, who's the chairman of the Local Government Select Committee. So within 2 weeks, an inquiry was initiated within Parliament. And this is still open. There was first the oral hearing, and now there's a collection of evidence from various public bodies. Again, activists haven't been called for evidence. Interestingly, there was no mainstream coverage, even if it reached the parliamentary inquiry. Only a few small local publications. So other forms of activism that we use is, for example, shareholder activism. So appearing at an AGM as a proxy shareholder and asking questions directly to the CEOs, to the board. So it allows to interact directly with the corporations, but also to try and put it on the agenda of the mainstream media. But unfortunately, even here, the mainstream media didn't cover it. So I'll go a bit more into detail about like the findings and. And before I do that, I'll just give a quick overview on how local authority finance in the UK works. First of all, just looking at this map, you can see that like the way that your local finances, local authorities are structured in the UK varies immensely across the country. So when you're dealing with a data set, it can be very hard to sort of make comparisons. So local authority spending corresponds to about a quarter of all UK public spending. And funding comes more or less 75% from central government grants, and the rest from council tax and fees and charges from council services. And as local authorities vary so much in structure and size, obviously these figures can change a lot across the country. They can borrow from any willing lender, and these are the main forms of borrowing, so mainly from central government, from what is called the Public Works Loan Board. They can issue municipal bonds, even if only the larger ones are actually doing it at the moment, and they can borrow from other councils, households and companies. And at the moment they're borrowing around 14% from private banks. So what we decided to do was to actually go and look and try to understand and audit this debt with the banks. More than half of local authorities are borrowing from banks, and I would say more or less 40 are actually borrowing more from banks than the Public Works Loan Board. And just to emphasize that there's a clear complicity, the central government is complicit in this. It's actually pushing local government to borrow more from banks, to the point that actually they're talking about closing down the Public Works Loan Board in the next year. Obviously, like, there are many reasons, and we'll go into detail of why it's problematic borrowing from banks, but mainly like we'll be looking at like the higher costs and the risks involved. I'm sure many people in this room know better than me, this is a problem that we're facing all across Europe. But I'm going to highlight some of the slight differences that we have in the UK. So one of the main issues is what's called caveat emptor. So basically in the rest of the EU, the expectation is put on the seller. So the seller has to have a duty of good faith towards the client. Well, in the UK, the responsibility is put on the buyer. So the buyer has to be aware of what the deal that they're going into. Interestingly, the mainstream media is always very happy to talk about corruption in other countries. So this is the BBC reporting on Italy, but also to be reporting on, yes, UK-based banks, but not necessarily UK banks. The other issue about the UK is that in 1899 there was a ruling called the Hammersmith and Fulham versus Goldman Sachs case, where basically local authorities were prohibited from taking out swaps. They had accumulated a lot of swap contracts that had become problematic. And basically the High Court ruled it was not council's role to be speculating upon interest rates, and taxpayers should not be held liable. But derivatives are quite important for banks to be able to be lending to local authorities. So they came up with this interesting type of loan, which is called a LOBO, which I'll tell you about now. So I'll try and explain it in a simple way. So LOBO stands for Lender Option Borrower Option. And basically, it's a very, very long loan, and it starts with a very low fixed teaser rate. But the lender, the bank, has the option on a predetermined future date, say every 5 years, to actually propose or impose a new rate. The borrower only has the option to either accept the new rate or repay the entire loan in full. Now, first of all, I put here such that every 5 years. Actually, these options can actually come every 6 months for certain loans. I've also put in some of the loans here. So, for example, this one says the lender may change the rate of interest by giving 3 business days notice, and the borrower must notify if they agree or not by 9:30 of 2 business days. So that's basically less than 24 hours even to make a decision. We found that actually, looking at some of the loans, some of them have actually reached 7 or 8, 9% interest rate. Also, the banks have made already 2 billion upfront profit from simply signing these contracts. If local authorities choose to repay the entirety of the loan early, or they have to repay it only because they didn't
agree, if they didn't respect some of the details of the contract, there'll be a very high breakage penalty that is about, it can arrive up to 90% of the loan value. This is just a break penalty. I've got like some, this is another one that, could come from the Middle Ages, how it's written. This is just a graph showing you basically in blue the total of loans accumulated by this council, Kent. The green is actually how they're accounting for them in their accounts, and the red is actually how much it would cost them to repay them based on market. I'll have to run through some of these slides now. So this is just basically the top lenders. As you can see, there's Dextia as the second top lender, so we'll be very interested to talk with anyone who's working on Dextia. These are the periods in which they were sold. Now, there are other actors in this, and I think this is really important to understand. So first of all, we have the brokers. So if local government was borrowing directly from the government, for a loan they would be paying only £75. For brokers, they reach fees. Brokers reach fees of £75,000. We've found that the average is around 25,000, and that overall they've been spending about 30 million in brokerage fees. But there's another figure which is the Treasury Management Advisor. Now, as you see, it's a responsibility of the buyer when they take out a loan. But unfortunately, within the councils, that we don't tend to have actually the expertise to understand them. So there are actually advisors that are paid to give advice on these loans. And what we have found is that there seems to be quite a lot of conflict of interest between the actual Treasury Management Advisors and the brokers. And this was also, there had also been a previous parliamentary inquiry on this relating to the Icelandic banking crisis. So just to summarize quickly with a mini animation, so you can either be taking the loan directly from the bank, there can be a broker involved, which obviously requires some extra fees. Brokers could also be receiving fees from the banks, because obviously there's competition between the banks. You have the Treasury Management Advisors who receive a fee, who also receive kickbacks from the brokers. So you can see that it's not pretty. But also, one of the things that is incredibly worrying is how actually decision-making is being privatized. It's not happening within the councils anymore, to the point that actually we've been working with some councillors that haven't been allowed to look at contracts. And we're actually teaching them how to use FOI to be able to actually see the contract with citizens and not councillors. So I think this is a really worrying process. This is just... unfortunately in the UK it's very difficult to be talking about corruption in the UK and actually to be dealing with it. So there are actually research on corruption, but very few people are actually taking action. Now, no one is looking at this. Basically, the government closed the Audit Commission in April 2015, which was the central government body that was auditing local government, and now it's being passed on to the big four accounting firms. And the various sort of local authorities, the regulators in the UK say that local loans and local authority debt is something that is not under their power to regulate. So no one is regulating. So this is a quick summary of sort of the context in which we're working. On one side, there's devolution to local government, but with huge closure of the Public Works Loan Board. There's actually movements towards restricting the use of freedom of information requests, no regulation of scrutiny, a media that is really completely biased and not supporting, central government complicit with the financial sector, and something really important to say here is we're really noticing how much things that are being done in the UK are being then spread across Europe and being exported as very successful models. And obviously the whole conversation before about how debt is being used to privatize public services. Very quickly, we want to be obviously continuing trying to get our evidence in for the parliamentary inquiry. We're in the process of publishing all the data that we've accumulated in an understandable way, because it is public at the moment, but very hard to search. Providing tools to local initiatives so that they can initiate. We're very inspired by the Spanish movement, so to see if we can initiate a similar process. And another very powerful thing that we would like to use is what is given by the Audit Commission Act, where like in a few 3 or 4 weeks a year, citizens are allowed to go into government and inspect the accounts, ask all the related documents, and after that ask questions to the auditor and ask them even to bring in their objection and possibly take it to the High Court or to produce a public interest report. There are various legal challenges we want to bring forward. I think one just to say here is also how we would like to also focus on those legal challenges where the Lobos were connected to the Libor rigging. And yes, obviously any help that we can have, any expert opinion, any networks that we can share, any information that we can share, we think is really, really valuable, and thank you for inviting us here because it's really important for us. Just to finish, for us, a citizen debt audit is not an attack on local government. It's an attempt to reclaim our democratic institutions and the common resources they manage from the powerful clutches of the financial sector. And this photo, I think, this image is, I think, related to Attac in Barcelona, so how actually, like, from these movements we can reclaim these spaces.